revenue up, but still losing money. A Tesla story. Tesla CEO Elon Musk has called the company a drama magnet compared to SpaceX, The Boring Company, or any of Musk's other endeavors. Since the launch of the Model 3, the $35,000 vehicle in Tesla's battery electric lineup, that's held true. Now in Q3, the company's financial statement reflects more of that drama, good and bad. Wednesday night, Tesla posted another loss, greater than the one before it, but with revenues and sales hitting record highs at the same time. According to numbers released today, PDF, Tesla posted a $671 million loss on total revenues of nearly $3 billion in the third quarter of 2017. Compare that to 2017's second quarter, where Tesla posted a loss of $401 million after total revenues of $2.7 billion. In a letter to shareholders, Tesla noted that it received record net orders for the Model S and X in Q3, the two automotive products that the company seems to be able to push out with consistency. This earnings call was especially anticipated in advance of the Q3 production numbers that Tesla posted in early October. While results for the Model S and Model X were good, 25,930 older model luxury cars were delivered in the quarter, beating the company's estimates for the quarter. New Model 3 deliveries were startlingly bad. Although the company had promised to deliver 1,500 Model 3s in Q3 2017, it only delivered 266 total. Tesla CEO Elon Musk blamed production bottlenecks, and the Wall Street Journal reported that major portions of the Model 3s that had thus far been delivered were built by hand. In opening remarks on an earnings call today, Musk said he was doing this call from the Gigafactory because that's where the production constraint is. "I always move myself to the place where the biggest problem is. I believe one should always lead from the front lines." Musk's comments confirmed reports from Reuters earlier this week that the Model 3 production issue was due to battery assembly problems. The Reuters report was based on comments from Panasonic CEO Kazuhiro Tsuga, who said that bottleneck issues may be nearing an end. Panasonic, you'll recall, has partnered with Tesla to run the Sparks, Nevada Gigafactory, where most of the Model 3 battery packs are supposed to be built, as well as the Buffalo Solar City panel factory. Tesla's shareholder letter published on Wednesday afternoon gave details on the problem. To date, our primary production constraint has been in the battery module assembly line at Gigafactory 1, where cells are packaged into modules. 4 modules are packaged into an aluminum case to form a Model 3 battery pack. The combined complexity of module design and its automated manufacturing process has taken this line longer to ramp than expected. We have redirected our best engineering talent to fine-tune the automated processes and related robotic programming, and we are confident that throughput will increase substantially in upcoming weeks and ultimately be capable of production rates significantly greater than the original specification. Musk also hinted at issues with a subcontractor on the battery assembly line causing problems. He claimed if subcontractor really dropped the ball, and we didn't realize the ball was dropped until quite recently, we had to rewrite the software for a battery assembly area from scratch. Tesla declined to predict when all the bottlenecks would be smoothed out, but the shareholder letter noted that by late Q1 2018 it hoped to be producing 5,000 Model 3 vehicles per week. Musk did seem to dismiss the Model 3's stumble start in the call, as well. The Model 3 is a 10-year program. A few months out of 10 years is immaterial, the CEO said. As for Musk's Model 3 production hell, a caller asked him to rate where Tesla is on a scale of 1 to 10. "We were in level 9, now we're at level 8, and I think we're close to exiting level 8, Musk said. "I had hoped we would be at level 7 by now." In mid-October, the Wall Street Journal reported that Tesla had reached a deal to open a factory in Shanghai's free trade zone. The company would still be required to pay 25% import tariffs on cars sold in China, but a Shanghai factory could curry favor with the Chinese government and would open up China's supply chain to the company. Musk seemed to confirm this news on the call, but noted that any capital spending on a factory wouldn't come until 2019. "Don't set your watch by this, but it's sort of a rough target of production in the next 3 years," Musk said of a factory in China. "And it would be serving the China market," he clarified, noting that the factory would probably only make Model S and as yet unannounced Model Y vehicles. "It's really the only was to make the cars affordable in China, but it's 3 years out," Musk said. Further reading report, Tesla is bleeding talent from its autopilot division. Musk also criticized